What's up, everybody? Welcome to the Stocks channel. In tonight's episode, we're going to do another stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along on all of my updates. Now, first up, we have the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so I want to start out by saying we've been telling you to expect a short squeeze melt up in the market now for at least a couple of weeks, and I really hope that that information has helped you out in your trading. So I'm hoping today's price action was no surprise for you as we continue to melt up and continue to see this bullish price action continue to surprise us to the upside. However, the technicals have been telling us to expect this price action, and that is why we have our other price level in the 350s, because I've been saying it's very likely that we see a short squeeze melt up at the end of this market to reach these higher price targets that you wouldn't normally expect because of the bearish sentiment that has been in this market. Now, with bearish sentiment in a market, that always means that there's going to be people on the sidelines with cash or trying to short this upward strength momentum trend and continue to cause the market to continue to squeeze higher. So we stand by the possibility that this market can continue to melt up and squeeze into the 350s on the SPY ETF. And that would be indicative of exactly what we're seeing with the price action in these trends. So we do see the prices continuing to close above the 5 EMA. And we see this very strong bullish trend with the moving averages stacked in a very bullish pattern with the 5 above the 13 and the 13 still above the 20. Now, we did open the gap a couple of days ago that's still below us, which is still going to act as a possible support level in any event that we get a pullback, and we could continue to see the market go higher after support is found. So we have all of these gaps below us, which is creating even more support for the bulls. And we could see this market continue to stay irrational and continue to grind higher for many, many more days or weeks or even months. Now, I will say once our price targets are met, that does increase the downside risk. And there's other warning signs that we are watching on this channel that if you've been paying attention are going to tell us when to expect the reversal. And of course, we'll always see the price action and the technical trends tell us when a reversal is in as well. But right now we have to respect the momentum and we have to respect the technicals and stay objective. And we still see the price well above the 5 EMA and the 5 EMA still trading well above the 13 EMA, which is telling us there's still a lot of bullish momentum in this trend. And I would not recommend trying to short something that has this much strength and this much upward momentum because it can continue to stay irrational and go higher longer than you can be profitable in a short position. So with the S&P 500, we did close up about 1% today and we're now pushing above the upper Bollinger Band. Now, normally when we start getting above the Bollinger Band, it means it's time for a retracement and a little bit of a pullback. So I would expect to find support at the 5 EMA and of course at this gap that we opened up around $340 in any event that we have a pullback. So right now we did close above our previous price target at $341. So our next price target we're watching for on the S&P 500 SPY ETF is this $353 range. So with SPY out of the way, let's go ahead and jump over to the Nasdaq 100 and we're looking at the QQQ ETF here. And we see that the Nasdaq 100 closed up over 2% today, also looking very bullish. Now, we did close well above the Bollinger Band on the Nasdaq 100 QQQ ETF today. And we do also have that gap below us that was opened as of this morning, which we will expect to also find support at these levels, which is giving us a price target for support around $286. Now, the one interesting thing about the Nasdaq 100 is we did hit our next upward price target today of about $292. So that could be another sign that we're hitting these upper price targets and we're going to see that correction in the stock market very soon. However, if we hit price targets, we always want to be aware of the next price target above us. In any event that we continue to climb, we know the next level that we're watching. So right now on the Nasdaq 100, our next Fibonacci extension level for a price target is this $300 level. Now, if we get up to $300, especially if we get there quickly, that is going to be very shocking at these valuations and these current prices that we're trading at well above the Bollinger Band. Now, let me illustrate this to you in a different way. And if we switch to a monthly chart, we can see that the Nasdaq 100 is well above the Bollinger Band. If we switch this to a line chart and we go from the top of the Bollinger Band for the month of August to today's close, we are 8% above the Bollinger Band. Now, just for comparison's sake, let's go back to 2007, before the recession in 2008, and we see something very similar where the price action closed on a monthly chart above the Bollinger Band. And in that instance, we were about 4.5% above the Bollinger Band in 2007 before we ultimately hit the recession of 2008 and had that drastic pullback. Now, history doesn't repeat itself, but it often rhymes. And I'm not saying it's going to happen in this exact fashion, but I do find it interesting to see how overbought the Nasdaq 100 is on a monthly chart. Comparing it to 2007, we are actually more stretched to the upside than we were in the highs of 2007. Now, the Fed is not doing the same thing they were doing back then, and the Fed got involved a lot earlier this time around. But if you look at this, it's strictly being objective, and it's strictly something to know about, is we are trading at very high valuations and very high prices, especially on a monthly chart, which in my opinion carries more weight than a weekly or a daily chart. One candlestick is each month, and that carries a lot more weight, statistical probabilities in the way I do my analysis. So going back to a daily chart, as you saw from last night's video, I also said that we're trading over 28% above the 200 simple moving average, and as of today's close, we are now over 29% over the 200 simple moving average. So these prices are by no means cheap. And I titled tonight's video Smart Money because the last thing smart money would be doing in this market would be buying into these highs and FOMOing into the top. I can't stress it enough that it is not a great time to be buying into this market in any sizable position, because smart money is also the big money. And due to the volume we're seeing, there's no evidence that the big money has been dumping their position just yet. Now, you could see back in the lows of March and as we were crashing in late February, there was a lot of volume, which showed us that there was a lot of smart money and big money building and accumulating positions in the stock market. After that smart money accumulated those positions, we see volume start to taper off down here, and we see the trend maintain, because that big and smart money is no longer selling. They've bought in and they're holding their positions. Now, at the top of a stock market, the smart money will start to sell their positions, and they're moving large volumes of money, which could really fluctuate the price in the stock market. So as we hit these upside price targets that we continue to hit, we now have to consider the risk associated with big money starting to sell their positions. And we also have to take into account that on that monthly chart, we're trading well above the upper Bollinger Band. Also, going back to this monthly chart, you can see that the bottom of the Bollinger Band brings us all the way down to a price target of $143. So this is a huge widening Bollinger Band, and we see that the price action is becoming more and more unstable as these lows start to fan out and these highs start to fan out. We're seeing this broad volatility range where these swings are starting to get more drastic as we approach these market tops. So there is a lot to consider, and I'm not saying we're going to come all the way down and touch the bottom of the Bollinger Band, but you have to remain objective and you have to look at all of these different possibility of things that are going on in the stock market right now. So just be aware of a more macro level view on the monthly chart and understand how far stretched we really are at these price targets. Now, going back to the technicals, we're still trading above the 5 EMA, so there's no reason to try to short and call the top right now, because the market can continue to stay irrational, and we still have the possibility for a continued short squeeze melt off, blow off the top situation where we see last minute FOMOing into the stock market because everybody feels like they're missing out and they feel like the stock market is just going to infinity, and they start piling in at the top. I'm not saying that's going to happen, but we have to remain objective and we have to know that that is a possibility. Now, if you remember me saying a couple of weeks ago that we would see these price targets, and a lot of people thought I was crazy because they thought the stock market needed to sell off and that we were hitting a double top. Well, here we are today, and now we've exceeded some of the price targets that I've given. So I'm telling you, these are very possible situations that we could be entering, and we could continue to see these prices continue to go parabolic and continue to head higher. So I can't stress it enough. Shorting is never a good option in a market that is being this irrational. You can see that these dips have been bought up and they're not even that drastic, and you really only have about a 1 to 3 day pullback before the market continues its upward trend. So even in the event that we start to get a pullback, you have to give the benefit of the doubt to the trend, which is extremely bullish and extremely in the upward direction right now. So even in the event of a few percent pullback, we could continue this uptrend and continue to melt up to these higher price targets. And on the Nasdaq 100, that is a price target of $300. So let's jump over to the Dow Jones Industrial, and we're looking at the DIA ETF here. And we see that the Dow Jones really didn't do much today, even though the Nasdaq 100 and the SP 500 had a fairly good day. However, the Dow Jones did close up about 0.3% higher today, and we still see it in a very bullish trend, forming new higher highs and new higher lows, and still trading above the 5 EMA. So I still have a price target on the Dow Jones DIA ETF of this $289, which is going to close that gap that we had during the March crash back here in the end of February. So look for that price target as well. In any event that we continue to melt up in the stock market, I would expect the Dow Jones to be right there with the S&P 500 and the Nasdaq 100, just at lower prices and no longer at all-time highs. However, still seeing some upward momentum. So let's jump over to the VIX, which is our fear indicator. And if you've been following along and watching my videos on my channel, you know that this has been a huge warning signal that I'm following. And today we had it flash in the best way possible, or the worst way possible, depending on how you're looking at it. So look at the VIX today. The VIX closed over 5.6% higher today, which, as you know, if you've been following along, we don't want to see the VIX go higher as the market goes higher, and the whole entire market broad indices went higher today, and the VIX actually closed up over 5.6%. Now, in my mind, that is extremely bearish, and this is a huge warning flag that we now see the 5 EMA getting very dangerously close to crossing the 13 EMA to the upside, showing that there's going to be bullish momentum in the VIX, which is our fear indicator, and showing that there is going to be more fear entering this market any day now. So I would not be surprised with today's VIX indication to see a huge spike in volatility and see the VIX absolutely explode to the upside any day now, because it's been flashing these warning signals, and we've been seeing the VIX building this pivot bottom in this support base. And now it's showing that it wants to go higher even if the market goes higher. So that's showing there is fear in this market, especially at these price target levels. And while that doesn't guarantee we're going to have a sell-off, it is heavily increasing the risk of a drastic sell-off. Usually the VIX will spike and a sell-off will happen when you least expect it. So I'm not trying to tell you the exact day the sell-off will occur. I'm just simply telling you to look for this as a big warning sign. And it's something that we need to respect, and we need to be paying attention to it, because right now, if you're looking at these warning signs at these price levels, you don't want to have all of your money just sitting in the market right now. That's probably the worst possible scenario you could be positioning yourself for as an investor or as a trader. So we're going to continue to watch the VIX. If it closes above the 23.5 level with this upward trend in the 5 EMA closing above the 13 EMA, that is going to be a huge caution area that we need to pay attention to. Let's take a look at some of the other sectors trading in the stock market. And first up is our financials. And we do see financials went down about 0.5% today, but we do have the 5 EMA that crossed back above the 13, and we're starting to regain some bullish momentum. So there's not much to report on the financials. I'm still looking for a bounce off support and come up here and test the 200 simple moving average. I still want to see the financials come up here and form a new higher high, which we have yet to see. So it's going to be a good test of support or resistance to see if the financials can break above the 200 simple moving average, or if they're going to come down here and get rejected and break down through support and continue a downtrend. Either way, we're going to learn something very important about the financials, and we really want to see the financials start to break to the upside if we expect to see the S&P 500 go higher for the remainder of the year. So right now, financials are a very key sector that we need to be watching, and so far we do have some bullish momentum. So we're going to give the benefit of the doubt to the buyers, and we're going to expect to see a test of the 200 simple moving average. And ultimately, we will wait and watch to see if that 200 simple moving average is going to be resistance, or if it's going to be broken through and then act as support for a future bull rally. So next up is the industrials, and we do see the industrials continuing their bullish momentum after finding support at the 13 EMA and then bouncing. Now the industrials have already formed their higher high, and they are also looking very bullish with the 5 EMA still trading above the 13 EMA and the price action closing above the 5 EMA day after day. So I'm looking to see the industrials continue their upward trend, which is a very good sign for the overall outlook of the S&P 500 continuing to print new higher highs. Next up is the healthcare sector, and we do see healthcare sector just sort of staying alive in its bull trend, barely closing above the 5 EMA, and the 5 EMA still barely above the 13 EMA. So any weakness in healthcare will be another warning sign that we're going to see some of these other sectors reverse from their bullish upward trend and possibly start into a downtrend. But right now, the healthcare sector is still holding up above its bullish trend, and we're waiting and we're watching to see if it's going to break to its next leg higher or show some sign of a reversal and a turnaround and start heading lower. All right, next up is the US dollar, and we're looking at DXY here, and we do see that the US dollar went down just a little bit today, which is not that concerning. So we still are waiting to see if the US dollar is going to find support down here and break down and show some signs of strength, or if it's going to continue its downward trend and break down through support. And right now on the US dollar, we're really just waiting and watching if it's going to continue an upward trend or continue its downward trend. So moving on, we're looking at gold here, and we see gold is still in its consolidation wedge pattern, and we're not going to guess if gold is going to break to the upside or the downside. We are strictly waiting and watching, and we're going to see if gold breaks to the upside, which will be very bullish, or to the downside, which tells us that we could expect to see a downtrend in gold. But right now it's holding up support at its previous all-time high after it broke through resistance and now acting as support, and it did find a wedge pattern that it's consolidating in. So we do have a few more days on gold to see whether it's going to break out to the upside or the downside. So we're going to continue watching that for a possible trade on gold. And of course, we always take a look at Apple, which is our market mover stock. And on Apple, we do see another close higher above the 5 EMA and a still very bullish trend. Now remember, I consider this a very FOMO move in Apple because we did have this breakout after earnings and we left these giant gaps open that we still have yet to be filled. So right now we're just waiting for Apple to show some signs of weakness, which will give us another early indication that the stock market may be ready for a correction. But ultimately, I do expect to see Apple come down here and close these gaps before continuing any sort of healthy uptrend. And right now, we see Apple doing what it wants to do, which is perfectly fine, and that is continue to grind higher. So if we go back to the SP 500, remember that we are at these crazy high prices, but we do have a lot of technical indications that say that these uptrends can continue and we can continue to see higher prices. So on the SPY ETF, look out for $353 as the next upside target. In any event that we get a sign of a reversal or a trend change, you'll be the first to hear about it right here on the Stocks channel. So please remember to like this video and subscribe to my channel so you can follow along on all of my future updates. Thanks for watching, everybody, and as always, I will see you in the next episode.